So the second objective is explain share capital and demonstrate the accounting for the issuance of common and preferred shares. So today we are mostly covering the slides, but on Thursday when we are meeting in person, I'm going to have some problems that we can work together. Okay. Authorized share capital. So the company will make a decision. Okay, so what's the maximum numbers of each class of shares should be allowed to sell? So class A, okay, I will put a cap that we should issue no more than 1 million shares. Class B common share, there is unlimited. I can issue as many as I want. So basically, it's really depending on your legal document, right? When you incorporate the company, what did you say about the share structure, right? Issue of shares, okay? If you issued directly to investor or through investment dealer, okay, the first public sale is called initial public offering. So if you never heard about this, I think you probably heard about the IPO, right? IPO. When a company wants to get into the stock exchange market, they have to do something called IPO application, right? Initial public offering. Initial public offering. So they issue the shares, they sold the shares to the investors on the market, okay? So that's how they get the money to run the business. Market value of shares, right? So if you have a stock exchange market, the shares are traded all the time, right? And you can just see what's the closing price from the previous year, right? And normally, the stock market price will be affected by many factors, right? So when negative news, very bad news happened, stock market will come down. When there's good news, often the stock market will go up, right? So the point is, if you have bad news, let's say, there are wars, right? There are wars now in the world. So these wars are pretty negative, right? Because these wars may cause the international trade, right? So, for example, right now in the Mediterranean Sea, now the cargoes, right? The international boats, they don't feel safe to travel through that area because some groups of people are trying to attacking them, right? So, and then they have to detour. When they detour, right, you know that it takes longer and it costs more money. Okay? So if that happen, then the cost of running the business will go up for all the company, right? So therefore, you would think that the company will be not as profitable as you think before. So therefore, the price will go down, right? Because the price always reflects the projected earning cash flows, right? So yeah, let's say there's lots of things, right? Maybe some natural disasters, right? Maybe one dictator said this word, right? It scared everyone. We worried about the third world war is going to happen, and there's going to be a nuclear war. Everyone's going to die, right? So you can see that all these public informations can really can affect your stock market. It can affect the stock market price. The market value of shares means that, right? Let's say the price closed at $11.10. As next day, the opening probably will be the number, right? So That's a market value. Legal capital. So legal capital, you can see the word legal, right? And the capital. So share capital is legal capital. It cannot be distributed to shareholders. Okay. So the reason why you have this ownership is due to the share capital. Right? So you don't distribute the share capital to the shareholder unless the company is dissolved, right? Return earnings are earned capital, right? Return earnings is the accumulation of the previous year's earnings left in the corporation. So this is the earned capital. So that portion can be distributed as dividend. Let's say you issued a common share. So when you issue the common share, you receive the cash from the investors. So therefore, your cash balance increased. You debit cash, and your equity balance increased because of the common shares. You credit common shares. So this is a cash transaction, right? So issuing shares in exchange for cash. But sometimes you could issuing common shares in exchange for service or asset, right? So for example, I don't have cash to pay a lawyer, right? But guess what? If he did this work for me, I'm going to give him 5 common shares. Okay. So then when you debit legal fee, right? Lawyer fee, legal fee, lawyer's fee, $5. And then you credit the common shares, not $5 because I don't know what's the price for each share, but we just recognize it's the 5 common shares, right? So preferred shares, you can just by reading the title preferred, right? They probably have some kind of priority advantage, right? So the priority over common share is for the dividend and the shares in the event of liquidation of the company, right? If the company decide to be liquidated, right, that means they're gonna cease their operation. Okay, so they will sell everything, then they have a cash, right? The question is, who should get the dividend first? Okay, you have the cash, you're gonna give this cash to the investors as dividend, right? Especially if it has return earning. So then who get first? The priority list would be preferred share will get that dividend first. And then whatever left after you settled all the preferred shareholders, then whatever left would be shared among the common share shareholders. And how you're gonna do the journal entry would be the same, right? It's just like when it's common share, you said credit the common share. If it's preferred share, you credit the preferred share. Dividend preference. Preferred shareholders have a right to dividend before common shares. Again, if there's a dividend, preferred shareholders will get it first. Once their dividend are fully issued, and then the common shares will have the dividend. So what is the cumulative preferred shares? Cumulative preferred share. So cumulative preferred shares have a right to current year's dividend and any previous year's dividend owing before dividend are paid on common share. So let's say my share is a preferred share, it's cumulative. Every year, $1, I have 100 shares. Okay, the first year, there's no declaration of dividend. Okay, so therefore, I have 100 shares, each $1. So I should have $100 preferred dividend Okay, preferred dividend. It's not declared yet. Okay, but one day it's going to be declared, but not now. Okay, and the amount is $100, right? Next year, again, there is no declaration of dividend. So then this is a second year, they would have another $100 dividend. So by accumulation, the first two and the first year two and the year one and year two, now together, they should have $100 plus $100, $200. Okay. And then on year three, finally, the company declared a $500 dividend. First, each year there's $100 preferred dividend. 3 years later, there's accumulation of 300 preferred dividend. So you have to give this money to them first. So you have to first give $300 to the cumulative preferred shares. There are only $200 left to be distributed among common shareholders. Convertible, I have 2 slides, then we're gonna take a break, okay? After I finish these 2 slides, we are going to take a break. Convertible preferred shares, we are talking about preferred shares, common shares, right? There are different shares, but actually, when the preferred share can be converted to common share. So in this example, okay, the value of the preferred shares is $100 each share. There are 1,000 shares. 1,000 shares, one share each $100. So in total, it is $100,000. Okay. Now you want to convert that into a common share. Okay. So you are going to debit preferred shares for 100,000. So that's a preferred shares balance decrease, you debit. And then you increase the common share balance by credit 100,000. So you can see this journal entry will retire the preferred shares. You won't see it anymore, but you're gonna have a new common shares, more common share. So what is redeemable or retractable preferred shares? Redeemable and retractable preferred shares. So for corporation, if it's redeemable, that means we can redeem the share. The corporation can redeem the share at a specified future date and the prices. But if this is the shareholders retractable, and the shareholders then can redeem the shares at specified future dates and prices. So when we say redeemable, we are saying about the corporation. So the corporation calculation have the right to redeem earlier, right? But if I say the shareholders retractable, again, the shareholder, if it's retractable, that means shareholder would have option to retire the shares, right? Okay, does anyone have any question about learning objective number 2?
No.
No? Okay. So we'll take a 10 minutes break, come back at 11, and then we'll do number 3. Okay, we're gonna do number 3, learning objective number 3, and come back at 11. Okay.